Let's move on. Let's talk about the real estate sector. The sector which has been witnessing constant pressure, no respite coming in from the government in terms of any policy directives. Godrej Properties reported a 33% decline in net profit margins with 1,500 crore debt. Devina Gupta caught up with the management, Pirojsha Godrej of Godrej Properties, who maintains that even though there is not enough demand, prices are still likely to remain elevated at current levels.
I think our goal is not to become debt-free, but rather to maintain a healthy balance sheet. We think a debt-equity ratio of 1:1 is very comfortable given the kind of assets our company has, including the development management model we have in place with our group company for what we think will be a very large development over a period of time.
So traditionally, you've always had an asset-light model. There is no doubt somebody else owns the land, you also put your investment in. But do we see you going ahead, investing in land, probably with another financial partner? So in the sense, having a joint venture with only a financial player in the sector and going out and investing in land and then developing it?
That actually looks very much like a joint venture partner. I think what you described is essentially taking a model that replaces the landowner with a financial partner, and then we're doing a joint venture with that financial partner. Yes. So that's certainly something we're open to and would look at as another way of growing our portfolio.
How do we see the expansion plans panning out for Godrej Properties in this fiscal year?
On the residential side, however, we will look very actively at expanding our presence in many markets. NCR and Gurgaon in particular is one of the very important markets to us. So too is the Mumbai market, the Bangalore market, and all of the other cities that we have a presence in, and we're quite excited about that in Mumbai. In Bangalore, we also have multiple projects. Electronic City, as you mentioned, is one of those projects that we hope to launch later this year.
So there is a bit of dichotomy here. On one side, you're launching new projects. On the other side, overall sales in the sector is dipping, but you are increasing prices in different projects in Mumbai. What's the reason behind it?
I think, it's a project by project question, a market by market question. There are factors that drive prices on a national level. So I think margins are under pressure, supply continues to be constrained. So my sense is any major price reduction is unlikely. We've consistently, said that we think that is unlikely.
Well, that was the management of Godrej Properties commenting about the pricing environment, saying that there is no chance of any price cut, at least at this point of time. Mumbai real estate market is on a completely different trajectory, with prices remaining elevated despite demand really not in place and absorption levels also remaining very, very low. That's real estate index for you, not doing much, up just 1%, but still holding up in a market like this. With that up, we wrap up this edition of Market Check, but stay with us. Up next is trading derivatives. Coming up on the show, we have Ashish Chandramurthy.